Let's take a look now at that red count. That red count is really very simple. It means that whatever you've been seeing is an A, B, and a 1, 2, 3 into C. This is just a higher degree A, and this is really a market top out. The market would do a B, and that B showing here in red is simply 3 swings, 1, 2, 3. 1 is showing in yellow, 2 is showing in yellow, 3 is showing in yellow. That 3 should contain 5 internal swings, 5 internal waves in it, also showing in yellow. So we have an internal 1, 2 here showing with that higher degree 1, 2. Then there already has been a 3, 4. There has been an A, 4A, and a 4B, and a 4C. These yellow labels. Now the market is just doing that 5 into 3 in yellow. Will top out at 157. All right, maybe lower around the old market top, and then just crash very quickly down into wave C. Wave C would usually bounce at the top of level 1 to disorient all traders and then take off again. Alright, remember the aim is to really give us the appearance of a double head, alright, trying to break the neckline at that terminal lower boundary of that ending diagonal, or give us a double inverted head at the neckline. Alright, that should give us the feature that we're going to be breaking out. So stops are going to be hunted on both sides. If you have stops very close to that lower boundary of that ending diagonal, alright, like this neckline here, you get hunted into a C. It depends now on the actual size and volume of longs and shorts in the markets. If you actually have more take profit levels, like we are planning to do short-term take profit levels, like 157.5, 157.25, they get hunted in take profits and they will draw the market higher. This is what determines actually what you would consider is the order flow. Is going either to push the market higher or push the market lower. Of course, the fundamentals are also going to impact. If there is very strong risk aversion, if there's something more progression military-wise on the fields in Ukraine, then yen will rise against the sterling. Anyway, in order to be on the right side, to be on the right flow, of course, we will stick very strictly to momentum plots. Momentum plot is showing that we have a positive momentum run, and therefore this is not a risk adverse advisement or environment. You can already see that you're taking off here in that blue candle, and therefore the market is a buy. Remember, we're going to buy. We should have actually, we forgot about this, that this was a cycle 3. We should be buying the pivot. Pivot level is at that level 1, today's pivot on the 15-minute chart. So if we fail to buy the pivot, we can buy R1. This is resistance 1 here. So we buy R1 right away, all right, in favor of the green count, because all momentum plots are positive on all the other time frames. So we can check the momentum plots in order to be sure of what we're standing on. This is of course a very strong momentum run on the 1 hour, and on the 4 hours I believe we have something in the making of becoming another strong momentum run. This is enough. So we know we are moving higher, and we will go with the flow. For us traders, we don't have to dream. This is a daily chart. We can get a rejection at overbought, but this will come at a neckline. We all know that this is a degree 1 on the daily chart. We were just looking at this on another 4-hour chart. Even if this rejects, it's going to reject at 158 to 157.9, which are the levels that we want to take profit at on our own 15-minute chart. So even on our own 15-minute chart, we're really looking at profit taking levels 157.23. So we should be taking that to 158 actually. On the daily, we can do a level 1 on the daily chart at 158. Looking here at 1, of course, we even have profit levels. Turns out this is our 5-3 here at 157.64, which is of course very close to 158. So we'll take it to 158 then. Let's take a look. We want to go into the market first. Before we take a look at the pivot levels, we want to do risk assessment. Now, if you're going to be a very risky trader, very aggressive trader, you'd go full size right away, all right, and have a stop for half size at that point, 115.5 for half of your full size. The market, if we are not correct, the market tanks, takes out our stop, Now this is going to be a level C. We understand the structure. We have to contain loss. Someone may ask, if you know that you're going to bounce at a wave C, why stop out here? Because I may not bounce at a wave C at the top of 1. I may bounce at a wave C. I may have a double head and this breaks that neckline. I may bounce at a wave C way down on a level 1 on the 1 hour chart. The market action will be very quick and I have to be out with the size of the risk that I can handle and endure. So I have to have a stop for half of my size at that level. That's again my take on it. Alright, so if we are very aggressive traders, we get stopped out half size, the market breaks into that C, bounces on top of level 1, it would appear that we have actually a wave 3 here, that one shown in yellow, but it is still bullish, and we get a bounce on top of a level 1 in a 4 that's going higher. We get a confirmation on momentum, we add again that half size that we actually closed, but this time on a confirmation, and we go for that 158. If we have not, of course, taken profits earlier, if that trade goes against us before we go to 157. Doesn't look like it, of course, because the market's already moving higher, and looks like we are correct in assumption that this is an internal 1-2. We just buy the market into it, takes us to 158. Again, if this is full size. If you are a very conservative trader going into the weekend, we would buy only half size with a stop also here, fixed stop 155. Keep in mind you're conservative and stops do not get filled across the weekend. Okay, so if for instance Russia invades Kiev during the weekend, this is very risk adverse development for stocks and trade activity in Europe. Very risk adverse means that everyone will be closing out, institutions will be simply selling out on all assets in Europe. Yen will rise in Asia against sterling. You open on Monday, you'll find that actually the market is at 154.50 or 153. All right, so even your stop is not hit and they will fill you at a lower level. At that point, you have to take that into consideration.